Afternoon, Kaz. How are you?
Afternoon, Leo. I'm fine, thank you.
Excellent, excellent. Kaz, we asked you to put some charts together. We were interested in seeing how the fund performance has been to close the week off. So, thank you very much. You've spent some time doing that for us. I wondered if you could just take us through them now.
Yeah, I'll take a look through them, Leo. I put together some charts with longer term performance, and then we'll just look a little bit about what's happened recently and put it into some context.
Great.
So if we look firstly at the first chart I prepared, it covers 5 years of time. So the 5 years up to the end of March. So that chart shows the returns of the courtiers multi-asset funds against their peer groups. Their peer groups are shown in grey and the courtiers funds are shown in the courtiers red colour. So the peer groups comprise a selection of all the funds that are managed in the same way that our funds are managed, and it allows direct comparison. So those funds in the peer group have the same or similar mandate to courtiers. If you look at the first peer group, you can see it says IA, mixed investments, 20 to 60 shares. That is IA, the investment association, and mixed investments means that it has a mixture of equities, bonds and other assets. And the 20 to 60 shares means every fund in that peer group must have between 20 and 60% equity weighting. So you'll see it brings together the collection of funds that allows us to have a good comparison for investors. What you can see from the chart very clearly is that over the 5 years ending March, all the courtiers multi-asset funds have significantly outperformed the median fund in their peer groups. So we're absolutely delighted with these returns, particularly since March and late February this year has obviously been so difficult, and those returns are included in this chart.
Excellent. Thanks, Kaz. And you've got a 5 year Sharpe ratio versus peer group. I wonder if you could tell us what a Sharpe ratio is exactly.
Yeah, absolutely. So a Sharpe ratio is, in simple terms, it's measuring the return we get for every unit of risk that we take. So if you want to compare a courtier's fund against another fund, then you can very easily do that with a Sharpe ratio. And it allows the investor to see whether courtiers is delivering return for each unit of risk. If we look at the 5 year Sharpe ratio chart, again, you can see it against the same peer group. And the grey bars again are the peer groups and the courtiers red colour for the courtiers funds. And you can see here over the 5 years that the courtiers funds are outperforming the peer group average with regard the Sharpe ratio, which means that each of those courtiers funds is delivering a little bit more return for each unit of risk it is taking. The Sharpe ratio is really the holy grail for us. It's what we're looking to do all the time. We're looking to make sure that for every bit of risk that we take, we're delivering a return that is a good return for the risk that we're taking. And this chart just evidences that over the 5 years, we've done a good job of that. So we're incredibly proud of these Sharpe ratio results.
Brilliant. Thanks, Kaz. That's great. Um, Finally, you've got a Bloomberg chart.
I have. So the Bloomberg chart is it's a little less easy to understand because of the black background, but this is simply the courtiers funds over the last 7 weeks since this COVID-19 crisis began. And I've reported quite regularly in little snippets over this period with much more short-term performance. This chart takes the whole 7 weeks from what we're defining as the start, which is the 21st of February, which is the night before the FTSE had that big crash in one day,
Sure.
which sort of marked the start of the crisis in the equity markets. And from then on, you'll recall, of course, that the equity markets slumped day after day after day until, and you can see on the chart very clearly, it reaches a low on March the 23rd. Now in the chart, the white line is the cautious risk fund, the orange line is the balanced risk fund, the pink line is the growth fund, and I've put in there as well, just because it's reported on the news a lot, the FTSE 100, its total return index, including dividends, is the green line on the chart. And you can see, of course, that all four take a real plummet downwards from end of February through to the 23rd of March. What I think is interesting now is looking at the recovery since. And the chart really doesn't show the scale of the recovery because, of course, the scale of the downfall was so steep as well. But if I put some numbers on that, The cautious fund is up 10% since that down point on the 23rd of March. The balanced fund is up 15%. The growth fund's actually up over 18% since the 23rd of March. And the FTSE, by contrast, hasn't had such a great recovery. It's only up 12%. What we're mindful of during this period is the volatility on the markets. And of course, that went very high back in February and March. And I reported in some of my bulletins it was up over 80, the highest it had been since the financial crisis. In fact, now prior to that, it's higher than it was in the financial crisis. But it's come right back down to 38, which is still high in terms of average terms, but it is a lot lower than it was a couple of weeks ago. So things have stabilised a little bit in the markets, and you see that with returns from our courtiers funds and the FTSE stabilising a little. The worst is not necessarily over, but what we have seen is a bit of stabilisation. We are taking opportunities in the market. We're looking for these good opportunities, and our returns since that 23rd of March have been really strong, and we're really pleased with those.
Kaz, thanks again very much for putting these together and giving us that insight. I find it very clear. I'm sure if we get any questions from clients, we'll get those across to you and see what you can do with those. Other than that, I hope you have a great weekend.
Thanks very much, Leo. You too.
Thanks, Kaz. Take care.
Thanks.